Okay, so let us move on. Next chapter name, Keynesian theory of national income. This is a very small element. Quite a few graphs are there, but let's understand the important one. First, let us understand circular flow of income. We have two-factor model, three-factor model, four-factor model. Let's first understand two-factor model, and that whatever we discuss is an extension apply for 3 and 4. So let me tell you what is this circular flow of income. You have two kinds, two-factor in model. First model, let me explain you, two-sector model. Okay, so two-sector model, there are two sectors. One sector, let's say household. The other sector, firm, or you can say business. Now, firm will produce goods, which we call it as goods and services, let's say, production. Firm will produce goods. So, they will produce goods and services for which the household is going to make a payment, right? Household, when you purchase goods, TV, laptop, toothpaste, food, Nestle, Maggie, rice, anything. So you purchase and you're going to make a payment. That is, you will consume expenditure. Now, similarly, to produce goods, firm require certain facilities, certain services, which we call it as factors of production. So, firm requires certain factors of production, like the people have to come and work. The firm has to purchase some materials. We call them as land labor capital, that is factors of production. Now, once they, for example, if individual goes to the factory and the work, they are giving the service, they are giving the factors of production, they will have to get paid. And what they get paid, that is what firm has to pay for that, is called as, you can say, rent for the building, wages, salaries, etc. So you understand this is an two sector model. Household and the firm, they are reflection of each other. Household spends money on the goods produced by the firm. So for the household, it is an expenditure, and for the firm, it is an income. Similarly, when the firm requires some services, household people will come and work, let's say wages. So for the firm, it is the expense that is going to be paid out, and for the household, that becomes an income. Only two people are there. This is called as two sector model. We have some more points we will discuss. But what is three sector model? We are going to get one more, that is government. Now household will be paying taxes to government, and government will be providing infrastructure services, and even the firm will make the payment, and government will spend money. They will construct roads, they will purchase cements, so they are going to make a payment to the firm. Vice versa, both kind of transactions will be there. That is three sector model. What is four sector model? You will have one more, that is outside India or world, rest of the world, where it will be an open economy. You will purchase even from outside your own country. So government also will be involved, household also will be involved. You make an import, you make an export, firms will do an export, they will sell outside your own country. So that is world is also involved. So two factor model, three factor model, four factor model. So three factor, four factor are just additional layers that you don't worry much. But let's understand the two factor model little bit in detail. Three factor, government gets added, and four factor, the world will get added. This is a proper presentation. I hope you have in your material also two factor model. Yes, I've given this. Just 1 second. Okay. Okay. Now, regarding the two factor model, we have to understand certain terms. One is income, other is expense. Income, we can say disposable income. Regarding that, please understand three terms. APC, that is average propensity to consume. MPC, marginal propensity to consume. MPS, marginal propensity to save. Now, what is average propensity to consume? What is my total income and what is my total consumption? My expenses is 80,000. My total income is 1 lakh, which means I will spend 80% of my income towards expenses. That is my average consumption. Change in consumption means if I get additional salary, let's say, from 1 lakh, I get additional salary. Let's say when I get salary of 10,000. So when I get 10,000 salary, what money I spend? Let's say I will spend totally 85,000 or let's say 86,000. So what is my increase in salary? 10,000. What is my increase in expense? 80 becoming 6,000, 6,000. So for getting 10,000 extra income, I'm spending 6,000 expense. So what is my marginal propensity to consume? Change in consumption is 6,000 and change in income is 10,000, means zero point 0.6. So what's the meaning of this? Every additional rupee of income I get, 0.6 rupees I'm going to spend it. What about balance 0.4? That's going to be saved. So change in savings. So in this case, savings is going to be 4,000 because 10,000 I got it, 6,000 I spent it. Saving is 10,000, 4,000 out of 10,000 income is going to be 0.4. So we can say MPC is 1 minus MPS or MPS is 1 minus MPC. Okay, so let's understand one graph with the help of this example. We have aggregate demand schedule. Now, demand and supply, they are the two foundation bricks of economics. Let me quickly cover that for you. Okay, that you should be very careful whether we understand in macroeconomics here or any other thing later. You have to understand two very basics. You might be aware of it. I'll just repeat it. One is called as demand curve and the other is called supply curve. What is demand curve? If I represent quantity on the x-axis, price on the y-axis, as the price reduce or as the quantity increase, price will reduce the quantity of demand. You would have seen, right? If some discount is offered, many people will stand in queue. Free data, GeoSIM, you should have seen the queue, right? When something's available lower price, people will start queuing up. Reduction in the price, demand gets created. Other things remaining constant. Then we have supply curve. Supply curve, x-axis price and y-axis quantity of supply. Supply of goods. Now this is going to be incremental thing, which means as the price increase, supply also increase. If price increases, I would like to sell more because as a salesman, I get more income. As the price increases, I would like to sell more. This is basically like think from a buyer point of view, seller point of view. Buyer, demand, right? Demand is for buyer. He want less price. As the price reduces, you buy more. But this is for seller, supply. As the price increases, you would like to sell more and more, thereby making more sales. But more importantly, if I represent in the same graph, the demand curve comes down, supply curve increases, this is price, this is quantity, demand curve, supply curve. This intersection point is called as equilibrium point. Equilibrium price or equilibrium point. Now, does this apply in real life? Many people think this is not realistic. I'll give a simple example. This is definitely applicable in real life. How? Just imagine you go to a shop, footpath vendor. Some fruits are there. Some fruits. You ask him, how much is this 1 kg? He will tell 100 rupees. And what do you tell? 100 rupees, too much. 100 rupees, too much. Which means price is high. I am not ready to buy. My demand is not there. Price is high. My demand is not there. But at 100 rupees, he is ready to sell. So at 100 rupees, demand is not there. Supply is there. He is ready to sell. Now, then you tell him 100 rupees ಜಾಸ್ತಿ ಆಯ್ತು. 100 rupees is too much. Give me for 50 rupees. Now what he will do? 50 rupees, go to next shop. So at 50 rupees, demand is created. You are ready to buy when the price is less. But at 50 rupees, supply is not coming. He is not ready to sell. For a higher price, demand is there, supply not there. Sorry, for a higher price, supply was there, other person was ready to sell, you are not ready to buy, no demand. So when the price was high, we are at this point. We are at this point. That is, seller is there, but buyer is not there. And when the price became less, demand created, yes, demand created, but supply was not there. He was not ready to sell. So what will happen? 50, he make it a 60, 100 will come to 90, 60 will become 65, then 90 will become 80. Then you tell, let's compromise. Namgu beda, nimgu beda. Let's compromise. Let's make it at 75 rupees. You have compromised, he also compromised, and that is what is equilibrium point. The economics works beautifully in practical life, of course, provided you understand. I hope at least now you will be able to understand. The equilibrium point basically means seller compromising little bit and the buyer compromising little bit, and if both of them agree, then the transaction will take place. If both of them does not agree, seller will say, I cannot sell below 80. Buyer will say, I cannot buy above 60. 60 is my limit, 80 is your limit, gone case. Transaction will not happen, equilibrium will not take place. I hope the foundation of economics is very clear to you. This is very foundation. Based on this, many theories are built upon. I just want a confirmation. Are you very clear about this equilibrium point? Yes, thank you. Okay. Now let's me look at the other aspects. Other aspects is just an additional thing. Okay, so let me take this example. So we have macroeconomics. So we don't call it as demand. I call it as aggregate demand and aggregate supply. And income, usually I express it as Y. When you have income, you will be able to buy goods, right? See, for example, try to imagine where the supply comes from. Only when you have money, right? For you, income should come. For you, supply should come. Then only you can create demand. Then only you can spend money. So you need that income. That income for you is the supply, aggregate supply. Income, what is coming to you? What is the money supplied to you? Let's say I'll start from zero income, 50 rupees income. I'll give time to write down. Don't worry. First I'll explain. Then I'll give time to write down. 0, 50, 100, 150. Your income is growing at different levels and so on. Let me tell you. Let me say. I don't know whether I have the question or this is question. I'll solve it later. First, let me just take this example. Don't write it. I'll give time to write down. C stands for your consumption. I stands for your investment. Consumption 50 plus 0.5 Y. What is 50 plus 0.5 Y? 50 rupees, I will spend it whether I have income or not. Some basic expense I should have it. Even a just born baby will have expenses, but baby will not have income. Maybe if it is politician's baby, starting only they will have income, benami assets. Anyway, so when you have zero income, also you have to spend some money. That's what 50 rupees. Then 0.5 Y. What do you mean by 0.5 Y? Every 1 rupee income I get, I spend 50% of it. And I invest. This is my consumption and this is my investment. So what I consume and what I invest together creates demand. First of all, I should have money. So income is my supply. If income comes to me, I spend. I spend on food. I spend on clothes. I spend on investment, capital market, even computers. I spend on investment. So my inflow is supply, that is income, and my expenditure, my outflow will be in the two form, that is what I spend, consumption, plus what I invest, of course out of savings. So if I don't have income, my if income is zero, y is zero, that means if this part is not there, I still spend 50 rupees. So C is 50. Now if I have income of 100 rupees, then what will happen? Substitute hundreds, sorry, 50 rupees. Substitute 50 rupees, 50 into 0.5. 50 rupees income I get. 50% only I spend. Means what? 25 rupees I spend. 25 rupees plus 50 means 75. Similarly, 100. 100 into 0.5. 50 plus 50. 150. Sorry, 100 into 0.5, 50. 50 plus 50, 100. Then 150. 150 into 0.5, 75. 75 plus 50 is 125. Like that. We'll complete the table. Don't write it down. I'll give you time to write. Investment is flat. 50 rupees flat. Every time you require. Flat 50 rupees. So aggregate demand will be how much? 50 plus 50 means C plus I 100, 75 plus 50, 125 and so on. So that's what creates aggregate demand. So this first column is your income, aggregate, supply, and what you're spending out of pocket and what you're spending as investment, both of them. That is aggregate demand. Now, if I reflect this in graph, where it will intersect, I told you the demand and supply should intersect. The demand 200, aggregate 200, that should integrate. That is what is the equilibrium point, and that is your appropriate income, and that is the appropriate cost for the firm. For your income, the same thing will be expense for the firm, cost of the product. Again, don't write it down. I'll just give the graph also. So we have expenditure on y-axis, income on x-axis, demand supply. And aggregate supply starts from zero. Supply starts from zero income, so it keeps increasing. You get more and more income, more supply. Aggregate demand, where it will start. It will start at 50, right? Because even without income, you have to spend 50. So basically, 50 is the starting point, or you'll say investments. Your flat amount investment I. And now you start spending from 50 rupees, because even with zero income, you have to spend 50 rupees. That is the minimum expenditure. And as your income starts growing, expense also growing, 50% of your income you spend. This is C. And C plus I, that is, if I add this C line and I line, then what do I get? The higher line, which is demand, aggregate demand, C plus I. Now, this is intersection point, what I'm calling as equilibrium point, and that is what is exactly 200, equilibrium point. That is point E. Okay. Okay. First, you write down till here, then let me go further. This much you can write down. The C plus I is what is the aggregate demand, equilibrium point. Okay, done. Okay, done. Okay. We have one more column. I've not written, but just observation. Now, first case, can you tell me how much is going to be your savings? You earn zero. You have to spend 50 rupees. Assume you don't make investment, you spend 50 rupees. So, or even if it is zero, you have to spend 50 rupees. So, your investment is going to be minus 50, or I mean, you have to borrow basically, right? Minus 50, you have to spend 50, and that is called as savings function. You have to spend even when you don't have money, means you don't have income, means you have to borrow, savings. And if you add C plus I, your consumption plus savings, then that region, equilibrium point, both will be equal. Your consumption plus investment, that is where you get your equilibrium point, is equal to consumption plus savings. But if you go any point beyond this, above this point, you observe here, this region will be consumption plus investment will be greater than consumption plus savings, which means you are going to spend more than what you have. Whereas in other case, you are going to spend less. That is, consumption plus investment is lesser than C plus S. Again, don't break your head too much. What point I'm trying to tell you is very simple. At equilibrium point, the world is perfect. My consumption is somebody else's expense. That is what I give you example of vegetable. My buy price and other person's sale price exactly matching. That is a perfect world. But in reality, that may not be able to achieve easily, or sometimes not possible. You will always have a difference. Either you will be below equilibrium point, or you will be above equilibrium point. Below equilibrium point, that means you spend more, you invest more, and you have less money, so shortage will be there, deficiency will be there. Or if I take it above equilibrium point, which means I have saving more, I have more money, but I've invested less, so there is a shortage in investment. So either surplus will be there or shortage will be there. Below equilibrium point, there is a deficiency. Above equilibrium point, there will be a surplus in the economy, in the goods which is being produced, relating to the income of individuals, and so on. So what is that exactly? That's what Keynesian theory says regarding the national income. It is national income by two factors: aggregate demand and aggregate supply, or you can say aggregate income. Aggregate demand, what goods, investments made by individuals. Aggregate supply, the income, what received by household, producer goods, consumer goods, everything. Equilibrium level, that means aggregate demand is equal to aggregate supply or aggregate income. Supply, I told you, is also aggregate income. Demand is where household spend, so that is equal to aggregate expenditure. So aggregate income is consumption plus saving. Aggregate demand is consumption plus investment. So what they are trying to tell you ultimately is this is the ultimate. One second. Okay, this is the conclusion of Keynesian theory. What they are trying to tell you: aggregate demand should be equal to aggregate supply. If that happens, there is a equilibrium point. But if demand is less, supply is more. You would have seen, right? Even in lot of news channels, a farmer has purchased tomato, has grown tomato, come to the market, no buyers are there. He cannot take it back also. He'll throw everything on the ground. I'm sure lot of news channels will make it filmy kind of thing, exaggerate and show it. And sometimes they will be in real struggle as well. So what is happening, real point there is this: there is supply, lot of people are growing, but there is no demand, there are no buyers. Sometimes it is artificially created also. And at an economy level, now don't think at individual one product level, at economy level, imagine India producing so many goods, aggregate, Demand, I mean, we are producing everything, but people are not there to buy. No demand, but goods are increasing. In that case, it results in unemployment. Because imagine a company point of view, business point of view, imagine Tata Motors or Hero Honda or Nestle, for example. They have produced goods, but people are not consuming it. They have to hold inventory. They are not able to sell. So business will come down. So business comes down means they cannot generate employment. It results in unemployment because it is bad for business. The gap between actual output and potential output basically results in huge inventory. What will happen in other way around? I mean, basically, you can say this will lead to depression kind of thing. In a business cycle, that will lead to depression, recession. Depression, or let's say the better word is recession, over a period of time. Will not happen immediately, over a period of time. Supply is there, demand is not there. During Corona stage, supply was there, right? So many cars was there, real estate houses was there, real estate share price were to the core down because no buyers. During Corona stage, who will buy real estate, who will buy mobiles, who will buy cars? Everything was down, demand is less. Now think other way around. If demand is more, supply is not there. It happened in during Corona stage also. Demand was there, so much of demand for food, so much of demand for these storage items. There is vegetables, fruits, milk. So when demand is there, supply is not there, then the price will increase. I'll give a simple example how it happens. Imagine you have a bakery who has bun. Now two people goes there. Both want bun. They are hungry. Both have the money. First person tells, I want that bun. What is that cost? 10 rupees. Take 10 rupees. Other person tell, 10 rupees. No, no, I want that bun. I will pay 20 rupees. Getting the point? There is two demand, but supply is one. Demand is more, supply is less. So what will happen? Because demand is there, you'll say, I want more, I want it, I will pay more price, I'll pay more price, I'll pay more price. Ultimately, one person has, let's say, he will pay 1,000 rupees and get the bun. What is 10 rupees became 1,000 rupees. Why the price increased? Because there was a shortage of supply. There was demand, there was no supply, therefore the prices increased. You had to pay more price. Now when one person most pay more, everybody starts paying more only. So in the economy level, the price will increase. This results in higher prices. And presently, let me tell you, in present situation, we are worrying about this scenario. Inflation worry. Government also printed lot of money. I'll come to that part later. At present, Corona lockdown, in lot of places, lockdown, factory closed, some business closed, supply chain got affected very much. If I give an example of motor industry, there is a shortage of blue chips. The shortage of this, they call some chips for producing cars and all. There is a shortage. It was basically import from Taiwan, and they had to close down for various reasons. So there is lot of demand, but they could not produce. They could not supply. Now also we have that situation because of that strong, because of that holding corona situation. Even sometimes we can tell because of demonetization also. There are good things of demonetization. I'm telling some bad things. So business activity got shrinked. Lot of activity could not go smoothly because money was not there. Payment was not released. So the goods cannot be produced. Supply got affected. Supply in the sense, it may be food supply, it may be components, it may be anything. There is a shortage, but demand was there. That too in India, there is no shortage of demand, I can say. So prices started increasing, and now we are fearing that post corona, especially now, we are fearing inflation, increase in prices because of the corona lockdown. Many places got locked. We may not feel it, okay, You just get up in the morning, you take the food, you go to restaurant, have food, but where the restaurant get the vegetable from? From market. Where the market gets that? From the farmers. If farmers are not growing, or somebody is not supplying the goods intentionally, you start paying more and more. I mean, petrol price are also increasing. For what reason? Political part, let us leave it aside. Petrol price increase is definitely a cause of concern. Anyway, I don't want to be carried away. So when demand is more, supply is less, it reflects in higher prices, it's inflation. So this is going to be an expansion stage for the economy. Increase in prices, it will expand much. And how to control this? We have separate chapter, public finance will come to it. So ultimately, Keynesian theory says equilibrium point is possible, but very theoretical. Realistically, you will always have a balance between the two. Demand will be more, resulting in unemployment. Demand supply will be more, resulting in unemployment. Demand will be more, resulting in inflation or higher prices. Okay. So we'll have to do some basic problems on this. Again, this is an extension. Beyond this, we have three-factor model, four-factor model. You can go through that. But two-factor model is the essential ones where the foundation for all the concepts are laid down. In three-factor model, government adds in, they will inject some expenditure, collect taxes. In four-factor model, the rest of the world will come, where you will do have export import also. But foundation is this. Okay, so let's take up some problems. So come to the problem section. Okay, if the consumption function is C equals to 20 plus 0.7 YD, consumption function means what? 20 is a starting point, and whatever income Y I get, zero point 0.7 of that I'm going to spend. Then increase in disposable income by 100 rupees will result in increase in consumer expenditure by how much? Okay, first let me simply calculate increase in disposable income by 100. Suppose if current income is 100, if current, let's say if current income is 1000, what is going to be your consumption income? Your consumption expenditure C is going to be 20 plus 1000 in this is income into 0.7. So 700 plus 20, 720. This is increasing by hundreds. That means your new income, increased income. I'm just assuming 1000, okay? You can assume any number. Is 1100. C is going to be 20 plus 1100 into 0.7. 770 plus 20. You get 790. So what is your increase in expenditure? 720 became 790. It is 70. But so much calculation you don't have to do. I showed you to prove the number. What is the increase? Basically, this coefficient is there. No. This is what? Marginal propensity to consume or spend. This 0.7 means for 1 rupee extra, I spend 0.7. I earn 100 rupee extra. So what's going to be there? 100 into 0.7, you get 70 is the increase. Directly you get the answer. Anyway, I showed you the long method also. I showed you the short method. Go by the conceptual. So if you want the incremental amounts, just multiply it by coefficient. Mathematically, it's also called as slope. Coefficient. Marginal propensity to consume. Write down this calculation. Okay, done. Next problem I'll do. If autonomous consumption equals 2000 and disposable and the marginal propensity to consume equals zero point 0.7, if disposable income is 10,000, total consumption will be this. Basic autonomous consumption means even if income is zero, you will spend this amount. The equation is consumption is 2000 plus marginal propensity to consume 0.7 slow 0.7x, and if disposable income, or this is y, we will tell income usually as y. If income is equal to 10,000, cross multiply, 10,000 into 0.7, 700 plus 2,000, sorry, 10,000 into 0.7, 7,000 plus 2,000. So total consumption 9,000. Okay, next. In a two sector economy, the business sector produces 8,000 units at an average price of 5 rupees. What is the money value of output? What is the value? Price multiplied by quantity. So money value of output, price is 5 rupees multiplied by quantity 8,000. 8,000 into 5, 40,000. So in a two sector economy, household value is equal to the money value, that is 8,000 into 5, 40,000. So whatever they produce is whatever we consume. Both are equal initially. What is the income of household? Same thing. The output they produce becomes income of household. So this is A, this is B. You can write down the sentence. Next, third one. If households spend 60% of their income, what is the total consumer expenditure? So if you spend 60%, 60% of 40,000, that is 24,000. Okay. What is the money revenue received by business sector? So out of 40,000, how much now they spent? Only 24,000. So what they're spending is the revenue for the firm or for the business. So received by the business sector, what is spending by the household? That is 24,000. What happened to the level of outputs? They produced 40,000, but they have not consumed the full 40,000. They spent only 24. So what will happen to the balance? That will become inventory, unsold inventory. So the balance 16,000 becomes inventory, unsold inventory. So what should they do? Because this time they could not sell, next time supply was there, demand is not there, next time they should reduce the output. These are all chain of events, one after the another. Anyway, you can write down. Okay, hope it's done. Done. Last problem. For the linear consumption, C equal to 700 plus 0.8y, I is 1200, net export is x minus m100, find the equilibrium output. So what is the equilibrium output? Your aggregate demand should be equal to aggregate supply, that is aggregate income, y should be equal to expenditure, consumption plus investment plus net import or net export. So income is y and consumption plus I, that is C plus I, 700 plus 0.8y, this is what C plus I, C is 700 plus 0.8y, C is 7 plus 0.8y, investment is 1200, net exports is 100. So y comes left side, 0.8 comes left side, 1 minus 0.8 is 0.2, 700 plus 1200 plus 100 is 2000, 2000 by 0.2, that is 10,000. Here we have this is export import also, it must be a 4-factor model. But equilibrium point is say aggregate income should be equal to aggregate expenditure. If you have a government expenditure, you will have plus G, that's all. Aggregate expenditure will be equal to aggregate income, aggregate supply. Aggregate supply is nothing but income. So 10,000. 2000 by 0.2, 10,000. Okay. So hope this is done. This completes Keynesian theory. We are not discussed in detail, but within time available, we have discussed the key points. Let's go further. Public finance. Basically, our money with the government in the form of taxes and other things. Okay. Public finance. So, what are the main functions of government regarding public finance? Because when politicians are there, MPs are there, MLAs are there, they are spending basically our money because democracy we have, I mean, government. 3 functions are to be managed by government: resource allocation, income redistribution, macroeconomic stabilization, which is stabilization. Resource allocation means everybody should be given equal opportunity. Resource allocation. And that is why government starts schools. Education is required. Government schools. In villages, you will find only government school. Private schools will not be there. Resource should be available. Factors of production, land, labor, capital basically. That is making the resource available to every citizen, giving an opportunity to every citizen is resource allocation function. Income redistribution means equality should be maintained. We should remove the differences, disparity, distinction. We give reservation to various underprivileged people, to the deprived people. One of the reason is this income redistribution. Take the income from the rich people and spend it on public service. Macroeconomic stabilization. This is to face the business cycles and inflation. Because of corona, an economy was locked down, but they have to keep supporting the economy. So, lot of companies, lot of central banks, government went for printing of money. That's basically monetary function, but still, or giving incentives, giving subsidies, or take out subsidies, both ways. That is part of maintaining the economy stability. Not economy should grow fast, nor come down fast. We need to maintain a stability, consistency. stability function, that is macroeconomic stabilization. Let's look at one by one. Resource allocation of factors of production. What is the reason for this factors of production? Imperfect competition, externalities, factor immobility, imperfect competition, monopoly. Certain private people dominate, imperfect competition, monopoly. So let's say mobile phones or ports, whatever it is. If somebody is taking more health, education, whatever it is. If some private people is taking into the control of entire thing, then government should come and intervene. Imperfect competition. Or market is not, we cannot have perfect market everywhere. And that's why we also have Competition Act. I'll come to it little later. Externalities. Externalities are also called as spillover effects. We have, for example, negative externalities, factories, chemical factories. They produce chemical effluents and reaches rivers. Water pollution, externalities. Positive externalities also there. I'll come to it. Factor immobility. Factors, let's say for example, labor cannot be moved from one place to other place easily because some travel restrictions are there, or it's not easy for the outsider to get a rental space. So factor mobility, it should be easily movable, whether land cannot be moved, but labor capital should be easily available at every place. Factor immobility. A school example I gave you. People want education to villages, people are not going there. People are factory mobility, people are not going there. So the government will start a school, government school, and they will pay salaries. So that is the responsibility of the government. And what measures you can take? Expenditure. Example again I gave you, uh, education, provide public goods, health, government hospitals. Policies, you can have incentives and disincentives. Incentives means if you do well, if you do some social service, or we will give you compensation, we'll give you subsidy. Disincentives, if you are having too much of pollution beyond level, we will pay penalty, we'll charge penalty, or we will ask company to close down. Both ways, penalties. Competition policies, we will be discussing a little later. Competition Act, Vodafone Idea wanted to amalgamate to face the competition with Geo and Airtel. Now, two big houses are coming together, so there was a case against these two amalgamation, because if big people come together, there might be polarization, there might be monopoly or monopolistic situation. We want to have a competition, so we have competition acts. We also had a monopoly restrictive MRTP Act, but now it is Competition Act. Even there's one case going on. Everyday news comes. Future Retail amalgamated with Reliance. Amazon has filed a case that there are some problems there, they cannot be amalgamated. Anyway, so competition policies is the government responsibility. Tax policy, again, to make sure that it is available at a cheaper price. For example, sanitary pads will be at a lower price, or no GST to be added. Essential commodities, we should not charge GST, it will be available at a lower price to the people. Tax policy. Regulatory activities, that is police, administration, to make sure that there is no discrimination, there is equal distribution, and so on. Okay, this is the chart. Please go through it quickly. Okay, so resource function is done. Let me talk about redistribution function. Redistribution means they want to maintain equality. Objective, to achieve equitable distribution, to maintain or to remove the disparity. We normally say rich become richer, poor becomes poorer. How that should not happen is the objective of the government. Anyway, so a lot of heavy things. So I just try to tell one small joke. Try to tell. I'm not promising much. You might have heard it somewhere else also. So Indian politician goes to US and US politician tells, "Can you see the bridge over there?" His Indian politician say yes. US politician says, "From the bridge only, I have constructed this beautiful house from the commission I received." The US politician comes to Indian politician. Indian politician says, next to his house, "Can you see the bridge over there?" US politician says, "No, I cannot see the bridge." Indian politician says, "Yes, that bridge money only, I have constructed the house." At least they take commission. Here everything is evaporated. Anyway, so this is a problem of the government who was supposed to work for the poor, but the government people, they are becoming more richer. That is the biggest irony. This is like telling when we see the police, they are there to protect us. So we should feel good. We should feel protected. We should feel safe. But now what happens when you see the police? You will be like, what mistake I've done? They'll take something out of me. Especially when you see traffic police also. They're supposed to protect you. You should feel confident. You should feel good. But what feeling you get? Something done, your mistake you have wrong, or where I lose the money. Anyway, hopefully things will get better over a period of time. Because that is our mindset. I don't know if I told you earlier the difference between Indian mindset and Japanese mindset. What is Indian mindset versus Japanese mindset? Japanese mindset will be like this. If somebody can do it, if somebody can do it, I can also do it. If somebody can't do it, I should do it. That's how Japanese think. We Indians, how we think. If somebody can't do it, how can I do it? If he cannot do it, how can I do it? If somebody can do it, let him do it. And some people go one step further. If somebody can do it, I will not let him do it also. Anyway, so I don't want to go too much of distraction. Let's come back to this. So the objective of the government is to redistribute, to make sure that the equity, the disparity is taken out, equity is maintained. What are the measures? How we can go for it? Advancing the well-being of the deprived people to support poor people, equality in income, wealth and opportunities. So basically everybody should be given equal opportunity. And to provide minimal standard of living. And that is why we have various schemes also, midday meal schemes, even Indira canteen, one of the measures. Advantage, disadvantage, people making political separate. At least that is a good thought that food should be given. We also have uh, this education for all, compulsory education, compulsory health, those kind of things. What measures? Most important is taxation policy. Tax the rich. We call it as progressive taxation. What is progressive taxation? I am sure you must be aware. Income tax slab up to 5 lakh, nothing tax. Above 5 lakh, you will pay 20%. Above 10 lakh, you pay 30%. Above 50 lakh, above 40 lakh, you pay education cess, you pay surcharge. Even the effective tax rate goes to 40%, 42%. So higher income you get, you pay progressive tax. As you keep making more money, you start paying more tax. Progressive tax. But in the indirect tax, that will not come. Rich also have to pay something. The poor also have to pay something. The same cost will be there in the products. Earning more is a sin? No, that is a wrong mindset. Earning more is not sin. Earning more will be sin when your tax exceeds income. You earn 100 rupees, you pay 50 rupees tax, or you pay 30 rupees tax, that's fine. But problem with India is when you pay tax, that's fine, but you're not getting enough benefit out of it. Security measures, social security measures, those guarantees are not there. Even after paying tax, we still have to spend money on health, education, security, insurance. So those are the things that government should take care of. Those things, I think, where India is, I don't say that it's bad, but it's still long way to go. I hope things will get better over a period of time. When the transparency comes, I think everything will be more clear. I think what is uh, many people expect the politicians to do favor to them, or in my opinion, I don't want politicians, I mean, I am talking for BJP also, for Congress also, I don't want them to do big things. I want them to tell me what they have done. You understand? This is my personal opinion. According to me, democracy means we have various parts of it. It is them who are managing our money, our resource. Whether they manage well or not, that itself I'm not able to understand, right? All the politicians, all these elections are taking place on emotions. Some people say Hindu, some people say Muslims, or some people say we will take care of you. Basically, it goes by promises, it goes by talks, or some good things also they might have done. I'm not denying it. But where is the system? We want to understand how my money is spent. That is not there, is my cause of concern. Paying tax is not a problem as long as I know how the tax have been spent. It might be inefficient sometimes, but the transparency is what I feel should be lacking. Maybe by new technology, especially like blockchain methodology and all, should bring lot of change. Especially now you can see technology is making lot of changes. Things are becoming more transparent. Money, the subsidy is getting directly to your accounts. I'm not talking for any party. That is one of the best method, where you use the technology, remove the middleman, direct benefit transfer. I hope like that. This is just 1%, still 99% long way to go. Anyway, let's go further. So taxation policy, progressive taxation, that is higher income tax slab. When you get more income, you pay more. Financing public services, essential food, having a crop minimum price, basic price. I told you Indira Canteen example. Grains at a highly subsidized prices. So to support the farmers for the sugar cane, for the rice, for the wheat, and so on. Employment reservations, so that they will be given the opportunity. Again, reservation, some far is there, some against is there, caste based, income based. I have my personal opinion also. But one thing you have to understand, you need to have reservation. That I'm not against it. The way it is being utilized in India, the way it is being used, or the way it is being politicized, I have a difference of opinion. But reservations are required to uplift certain kind of people, community. Some people say based on caste, some people say based on income level, whatever may be the case. But to bring it into on same stage, we need certain reservations. Regulation of certain products, like the petrol is not very much regulated, in a way regulated partially, but certain product like essential commodities, they are regulated. You see auto prices are regulated. So some prices, product, services, government regulated. Social security measures, I think this is a comedy, because India really don't do it much, but it's a responsibility of the government to take care of uh, the deprived people. Whether it, like I told you, unemployment data, jobless claims data. If people don't have jobs for whatever reason, they should be given some allowance. Age old people, or some sort of security, so that the tax they collect can be spent well. This is a social security measure redistribution function. Stabilization function, basically macroeconomics stabilization. We don't want the economy to go down slowly, I mean too fast, or go up too fast. That is, both are going to be a problem. We have to maintain stability. To face business cycles, business cycles are normal. Sometimes it will be boom, sometimes it will be down. We want to maintain stability. To generate full employment, I told you what will happen. The aggregate demand, aggregate supply, If demand is more, supply is not there, price will be a problem. If supply is more, demand is not there, that means products cannot be produced, inventory will be reduced, business activity will be contracted, employment will be less. So for that, what should the government do? Government only can start a business. That's how they started, right? HAL, BHEL, BSNL, power grid, so many. So they started the, I mean, government has started so many public sector undertakings. One objective is to provide services to get the products, even railways, everything. Other one, it will also provide employment for people. Earlier, we were only looking for government employment. If we used to worship, if it is a government employee, 100% security, we used to worship. Now it's not the case, but that's the objective of government. That should be the target of government, to provide employment. That's what I want to mention here. The objective of the government is not to give you money. Just giving the money will not help. In fact, it happened in one of the countries. It happened in uh, Slovenia and Zimbabwe, African countries. What they started thinking like this: what do you want? What is our problem in our country? Money. Let's print money. How much you want? 10,000? Print, you take. How much you want? Print, you take. Printing money will not make the people rich. If you want the country to be rich, our products and service should be more. Product and service more means we need to give employment for the people. Employment means we can give loans at a concessional rate. We had like Pradhan Mantri, Awas Yojana, self-sufficient schemes, helping craftsmen, helping the small-scale industry, whatever may be the case. Our objective should not to give the money. Our objective is to generate employment, and that is why I have a small difference of opinion regarding many people telling these Ambanis, Adanis are exploiting company, exploiting thing. They are bad for the country. They are super rich people. According to me, they may be rich, but they have a business which will generate employment. And I have a difference of opinion of government selling the some disinvestment also in some cases. My personal opinion still, that government is doing some business which is generating employment, which is giving some sort of security. If it is run completely by private people, then government may not have control. So government may not be able to fulfill certain social measures. So I have few things against Modi. I have few things in favor of it. I'm having combination of both. Anyway, so but objective should be very clear. The government should take care of people not by giving everything free, by giving them opportunity, by giving them employment. Price stability. This is what we mean. This is what I worry about the, let's say, petrol price. They have to maintain some stability. Now, increase and decrease in secondary, I will not talk about it. But government should ensure it will not fluctuate too much. Today you go to petrol bunk, 90 rupees. Tomorrow it is becoming 110 rupees. The price will increase. Whether petrol or rice, any product, price will increase, make no doubt about it. But how it increase consistently or sometimes decrease consistently, it should not have too much of fluctuations. That is price stability. And overall output and income should be maintained, that is equalization function. And what measures? Monetary policies, money supply, we are going to discuss in detail, especially during corona stage. Lot of money is printed. And interest rate measures, we are going to discuss that in the next chapter. Fiscal policy, tax policy, increasing the tax rate, reducing the tax rate, every budget you will come to know about it. Government spending money, government doing lot of infrastructure project, government starting own organizations, government spend more money to support the business. During recession, especially like corona stage, government has to spend more money, they printed more money, they started the business. Expansion policy to be followed. If it is inflation, contractionary policy to be followed. Again, what is recession, inflation? Going back to Keynesian theory, aggregate demand is more, supply is not there. When demand is more, the inflation will come. If supply is more, then recession will come. That is, we need to follow expansion policy. If economy is down, government like a parent should bring them up by giving, by spending more, by liberalization, giving more licenses, make the business more easier, so that more activities will happen. Reduce interest rate, give more loans. We'll come to it later. So expansion policy means government spending money so that the activities will start happening. Recession will be controlled. Inflation means too many activities happening. We want to control the business. We say you are acting too much, you are hyperactive, control, calm yourself down. So the government should have a contractory policy, which will government should spend less. The government should control the money supply, take out the money supply, reduce the business activity. So inflation will be controlled. Even RBI is also will have a part in that. Okay, we have some more things like market failure and externalities, reasons, public goods. Quite a few points are there. We will take a break and then we'll continue. 1 o'clock now. Let's take a break of 1 hour. Let's meet at 2 o'clock. So let's meet at 2 o'clock. We'll continue. So take a break of 1 hour.